Welcome to the REI Mastermind Network, where host Jack Haas gathers amazing stories from leaders in real estate investing. In each episode, our guests will tell you what they're doing that works, what they've tried that failed, and best of all, you'll learn actionable steps to take your real estate investing to the next level. Now, here's Jack with another value-packed episode.
We have TJ Lokboj on the call with us with Holdfolio. He's one of the managing partners there. And this is kind of a unique platform we're going to be chatting about today. And it's going to lead into syndication. But I really appreciate your time, TJ. Thanks for being here. If you would like more information about and follow along, head over to holdfolio.com. I'll make sure to have that link in the show notes. But TJ, is there any other place that somebody might reach out if they'd like to after the show?
Absolutely. First of all, thanks, Jack, for having me on. And anyone can reach out through my email, tj@holdfolio.com, or find me on my social media links on LinkedIn or Instagram. So,
yeah, no, I appreciate you being on the show. And, you mentioned before we hit record that Holdfolio is kind of a newer concept for you. Why don't we start there? Like, how did this come about?
Absolutely. Yeah. And you're right. So Holdfolio, our firm, has been around since 2014, and kind of just to start with the genesis, we started syndicating, at first single family portfolios. And it got to a point where, we ran out of our own capital and we're looking to, syndicate. So we started with our own capital, and then we eventually started syndicating. This was actually a great inflection point for us, because at the time, the Jobs Act, was a newly legislation that came out, and it enabled, investors to retail investors to invest in private deals online, both accredited and more importantly, non-accredited investors. So then we started Holdfolio and started raising capital online. And so this was a huge opportunity, not only for the market, but for us to raise capital for our own deals. In 2016, we eventually started focusing on acquiring multifamily projects. And so we were able to, because we were one of the early starters of raising capital online alongside, the likes of Realty Mogul and Fundrise and even Kickstarter. Kickstarter became a huge hype in the business side of things. But we acquired a number of investors, just kind of getting early on. This was a new concept, and acquired thousands of investors. And this attributed to our success in raising capital online, because folks were now able to look at strong real estate deals that we were acquiring and participating in those projects through our syndications online. So that's how Holdfolio got started. We started in the single family space, eventually moved into multifamily. And in 2019, at the end of 2018, start of 2019, my partner and I, we were really looking for opportunities to increase our deal flow and finding the very best deals. Things have gotten extremely competitive, especially today. So we recently pivoted our business model, and we're still self-managing our own multifamily deals in our local markets. However, outside of these local markets, we're developing strategic partnerships with some of the strongest institutional level investment firms in the nation, and developing these strategic partnerships so we're able to invest our capital with their deals as well. So we decided to bring our network of investors along with us in this fund to funds model. Essentially, we're putting our funds into other people's deals or funds, and this is kind of how we're operating, the majority of our portfolio today. And it's been an incredible transition for us and our investors, because we are able to create these exclusive partnerships with some of the top operators in the nation, and historically, a lot of our investors wouldn't have the ability to invest in these with these operators. And so with leveraging the power of the crowd, we're able to establish a strategic partnership as another source of capital for these partners, and it creating a win-win-win situation through this model. So that's what we do at Holdfolio. Our goal is to really democratize private, strong institutional level deals to retail investors, both accredited and non-accredited. So that's how we operate today and how we're adding value to folks.
Sure. So just to clarify then, are you as a syndicator then investing in other syndications?
Yep, that's right.
Yeah. Huh.
Yeah, syndications and funds as well. So, we've done quite a number of these since we started. Year to date, we've acquired or invested in 7 of these partnership deals. And interestingly enough, all of these deals have all come through off-market opportunities. And this is the power of leveraging, some of these strategic partners who've first of all, we have a pretty strict criteria on who we partner with. We work with folks that have a long track record, strong track record, long history of operating as a firm. And so some of these folks have relationships with, brokers and boots on ground for up to 20 to 40 plus years. Mm-hmm. And so, we're partnering with these folks and giving access to their deals, not only to us, but our investors. And so to answer your question, yep, that's exactly the model. And as I mentioned, year to date, 7 acquisitions this year with these partners. And that spanned across different markets. And we've actually opened up different asset classes as well, such as senior 55 plus community, senior community, or active living communities, hotels, as well as new development. Historically, we've really just focused on existing multifamily acquisitions, but we've seen a lot of really interesting, unique opportunities that provided really strong risk-adjusted returns for us and our investors. And so this has been a really great pivot for us, and so yeah, I hope that answers your question, Jack. That was kind of a long way of answering. Yeah.
No, it's interesting, especially this model. So you mentioned that you have quite a bit of a pretty detailed vetting process. Can you cover a little bit of like, what do you go through in order to decide what syndications that your team is going to invest in?
Yeah, so there's quite a bit of research that's done on our end before we engage with the potential partner. Some of the high level, performance indicators or validation indicators that we look for is, 10 plus years at the very least of operation. And we try to align on the track record as well, as far as the return profile. So 8 to 10% cash on cash is our target personally, as well as our what we offer or try to target for our investors. And then on the IRR side, it's 15% plus. And so these are aggressive goals, targets, especially in this market. But we've been able to successfully accomplish that. Since 2014, we've had a really strong track record, year over year annual, or an annual average annual return that's pretty strong as well to our investors. And so, and then once we identify a partner, we like to engage with them, also connect with them personally, develop a relationship, have a series of conversations. And then the most important part is for us to actually underwrite and see how their deals pencil out when they have a live offering. We have an underwriting staff that looks at these deals, make sure they're conservative, we're not paying too much as a whole, and making sure that these business plans are solid as well. So that's generally how we engage in a partnership. Once we do make our first investment, we're able to do so very quickly by having the capacity of raising quite a large sum of capital between us and our investors. And, we typically like to do multiple investments with partners that we've done business with already. So a majority of our deals are repeat partnerships with these strategic partners. So,
sure. So when you're going into these joint syndications, then how much of the holdings is your company? Like, how big of a piece do you typically try to secure? Is that even something do you consider?
Yeah, we are at this point really operating as a large LP structure. So coming in as a single entity along with our investors going in and making these investments. So very low maintenance on that side, which is something that's quite attractive to these sponsors. We place our own capital in every single deal, which creates that strong alignment with our investors as well. And there's not really a target as far as what we look to acquire in the cap table, but we ensure that these sponsors have a pretty decent amount of capital that they invest in as well, so that the alignment is there. And to answer your question, there's not really a GP position as well in most of these cases. There are times where we would consider it and have done it before, but yeah, we our goal is to find the very best deals that we could have exposure to in our portfolio as well as our investors. And so the model that we're operating at right now, it doesn't require a certain equity stake in the overall cap table.
Sure. Well, just to remind everybody, head over to holdfolio.com for some more information. I think there's quite a few resources there to tap into as well. So definitely worth checking out. So, with this, I'm curious as to how, you mentioned the progression associated with the business, that you started off with single family homes and when moved in multifamily and now syndications. How did you personally get into real estate?
Yeah, absolutely. So I got into real estate, while I was in my my career. I originally started in tech, doing sales and marketing, and while I was doing that on the day job side, I was acquiring real estate on the side. My first deal was actually a small multifamily. So I started in the multifamily space, but a lot lower scale. It was a 4-unit here in Utah, and I house hacked that. That's how I got started. I house hacked that 4-unit about, it was a few years back, but after a year of house hacking, I then moved on to the next. And the second deal that I did as an investment was a 30-unit project out of New Mexico. And that was one that I syndicated with a partner. So we were able to acquire that. And after that, we, just started. Then I eventually got into Holdfolio as a partner. So there's kind of a backstory behind that. But my partner Jacob Blackett, who founded Holdfolio, we also own a software company called Syndication Pro. And so Syndication Pro is the fastest growing capital or investor management software today. We serve over 600 firms that are syndicators, fund managers, private equity. We're serving those firms as well. And interestingly enough, we all use the same software, Holdfolio and these other firms. We subscribe to Syndication Pro. And so that's kind of how I got started. Started in the small multifamily space, and then we started doing single family with Holdfolio, and then eventually, we just felt like it made a lot more sense scalability wise to do multifamily in our local markets, and then eventually we pivoted to the fund of funds model.
Sure. So you mentioned that a lot of the syndications that you're investing in are they're kind of diversified. You're even going into senior living. What are some of the other things that these syndications that you've been open to?
Yeah, right now we're very interested in the self-storage as well. From a cash flow and kind of a product that serves, more longer term holds. That's something that we're very intrigued about right now as well. And recently we took a survey with our investors. We have, over 4,000 investors in our database, who a lot of which have been active since 2014. We did a recent survey, and storage units is something that everyone's very interested in. So are we. So we're currently trying to engage with partners in the storage unit space who have been in it for a long time, and folks that we feel are reputable and ones that we're could potentially partner with. So that's definitely on the list. I would say, aside from that, there's some other assets that interest us as well, such as build to rent development communities as well. These are things that, as you know, a lot of private equity firms are looking at and acquiring these types of projects. But this is something that we're just getting into and kind of looking at, kind of keeping our eye on, but not actively kind of investing in today. So in the near future, I think storage units will be something that we will start adding into our portfolio.
Sure. So, with this being syndication that's reviewing to invest in syndications, can you cover a few of the additional benefits there? I mean, regarding like what other benefits would an investor see in just that return?
Yeah. So with syndications, with Holdfolio, like I mentioned, kind of the biggest edge that we have is these strategic partners. And so historically, if you were to invest with a lot of our partners, you're looking to cut, check sizes of $500,000 and more. Whereas when we're investing as a group, and when you're investing through Holdfolio, our minimum investment is literally $20,000. So it really opens up and eliminates that barrier to entry for a lot of investors who want to gain exposure to multifamily. Another thing is with syndications, you have more flexibility on the investment. So a lot of the deals that we do are private deals, private placement deals. So for our investors, they're able to look at our financials, look at kind of our offer memorandums and all the documents they need for their due diligence to make a decision. And they don't need to necessarily tie up their money into a fund, where with the syndications, you're able to have more flexibility on what you're investing in. And so that's another huge benefit. And then another huge part is it's completely passive, and you're not liable to a lot of the debt, the risk that comes with the debt as well. So for me, if you're a working individual that's making really good income and you're looking to increase cash flow and gain exposure to real estate, syndications is one of the best ways that you could do that. For us, you get to do it at a low minimum, and also it's completely passive. So our returns have been really strong annually since 2014. And so I would recommend anyone checking out our website and learning more. They could schedule a call with me or investor relations manager, and we'd love to see how we could add value.
Sure. Well, let's cover a few of the risks. What are some of the going to be put you on the spot and make you go a little transparent there? What are some of the risks or some of the things that a traditional investor might enjoy that you might not receive in a syndication?
I would say the biggest, I wouldn't say this is a risk, but it could be, depending on opportunity cost, would be, real estate in general is an illiquid investment. So when you're investing in syndications, your capital is tied up. until there is a liquidation event, whether it's a sale or refinance. And so for those who are looking to place capital into a fund or a syndication, just be aware that this is something that is illiquid, as opposed to, having cash in the bank or investing in the market, right, where you can just sell it and you're out and you get your money back. This is not something that they could do with syndications, and as well as the control aspect. You're generally coming in as a limited partner, and so you don't have really any voting rights or say as to how the operations is being managed. This is another thing to be aware of, depending on whether there's an individual that really, really loves control, or wants and desires control in their investments. This is not something that is possible within, a syndication. So, and so that I would say that's kind of another risk. Another big risk as well, I would say that when you're investing in a syndication or a fund, the number one risk is who you're doing business with, in my opinion. So really vetting out, who these people are, what their track record is, what their experience, how they are penciling out their deals, if they're conservative in their underwriting. These are all questions that you want to ask yourself and ensure that, that they're not novices to the business. And so that right there, I believe, is probably the most important part when you're trying to mitigate your risk. And this is why we go through such an extensive process of vetting out the partners that we do business with as well.
Sure. Well, we're getting close to the end here, but before we wrap things up, I have a couple more questions for you. One of them is that if somebody is interested in a syndication, are there a list of questions that you think they should probably ask to do their own vetting?
Yeah, I would say definitely the track record piece is really important. It's extremely important. Understanding how to look at the numbers is also important. As a limited partner, you want to make sure that you're verifying the financials, making sure things are conservative as well. And then, if they have references, if there's folks that they could, hand you off to talk to. A lot of the times, that's something that's not too much to ask for, but it goes a long way, especially if you're going to be deploying a large amount of capital with a syndication, a sponsor. Another important piece is, how much capital is being invested by the sponsors. Well, you want that alignment piece baked in there. So those are three that really come to mind that are extremely important and that we look at ourselves. So yeah.
Yeah, no, I think that last one of there is of particular interest, because more times than not, I've found, it's almost like dealing with property managers. Your interests sometimes aren't aligned, and it's best to establish that in that relationship right up front.
Absolutely. You hit the nail on the head there, Jack. You're absolutely right.
So, well, just one more time to remind everybody, holdfolio.com to reach out to TJ and his team and see what they're up to and how they could possibly help you invest in syndications. But before I let you go, TJ, is there a question you wished I would have asked you here today?
That's a great question. Nothing really comes to mind, Jack. Nothing really comes to mind. You've done a great job, man.
Well, I appreciate that. I appreciate that you've given us the time and some insight here. This is a new model. This is particularly interesting. You really have found a way to lower that bar for some of those investors who might have been excluded in traditional syndications. So this is really a neat project to see.
Yeah, we're very excited about it, and looking forward to adding value to our investors and to new folks who reach out. So I appreciate you having me on. Hopefully we could add value to your viewers who are interested in learning more about how we operate and how we add value. So thank you again, Jack. This has been wonderful.
Yeah, you bet. And I hope you'll come back sometime. Maybe we can talk a little bit more about your software platform. That's always of interest as well.
Sure. Absolutely. Yeah. This is a day and age where, especially with, new syndicators, or even investors, we're really trying to make it so this is something that is so accessible to everyone, so that we're providing the very best experience to investors, as well as automating a lot of the workflows for sponsors. In the past, acquiring software was just you're sacrificing an arm and a leg, and we've really lowered that barrier of entry. So I guess the theme for Jacob and I is, where are all the opportunities that we can cut costs and move our industry forward?
Mm-hmm.
So
no, that's understandable. It's as you were mentioning earlier, the margins are getting thinner and thinner, and you got to make them up somewhere.
Yep, that's exactly right.
So, well, again, TJ, this was a great conversation. I hope you'll come back again sometime, and thanks for your time.
Thank you, sir. Appreciate it, Jack.
Have you learned at least one actionable step to incorporate into your real estate investing? If so, please consider returning some of that value by leaving a positive review, subscribing to our YouTube channel, or joining our growing network on Facebook and Twitter. You can find links to all of our social media accounts in the show notes. See you next time.